Chinese yuan hits near two-year low. Asia FX hit by Fed jitters. The Chinese yuan sank to a near two-year low on Monday after the People and RS&Co's bank reduced lending costs for the second one time in 2 weeks, at the same time as maximum other Asian currencies fell amid developing uncertainty over the Federal Reserve and RS&Co's plans for economic coverage. The yuan fell 0.1% to 6.8273 to the dollar, its weakest stage because September 2020, after the People and RS&Co's Bank of China (PBOC) reduced its benchmark prices for a second consecutive week. The move comes because the financial institution struggles to stimulate the economy amid headwinds from COVID lockdowns, a debt-saddled belongings market, and a brewing strength crisis. The Chinese government currently vowed to help the financial system with more debt issuances and by increasing infrastructure spending. But Beijing is but to budge on its strict zero-COVID policy, which is at the heart of China and RS&Co's economic woes this 12 months. The PBOC and RS&Co's latest rate-cutting spree has also raised concerns over the country of the Chinese financial system, which barely managed to avoid contraction within the second area. Sentiment to broader Asian currency markets weakened on Monday as investors grew greater unsure over the Fed and RS&Co's plans for raising hobby fees for the rest of the year. The Japanese yen fell 0.4% to the greenback, at the same time as the Singapore greenback and the South Korean lost about 0.2% every. Malaysia's ringgit turned into the worst performer in Southeast Asia, slumping 0.3% to a 5-year low in tandem with weaker oil expenses. The dollar index and greenback index futures rose mildly, but held round 5-week highs hit last week. Traders are actually waiting for Fed Chair Jerome Powell and RS&Co's Copewith to the Jackson Hole Symposium later this week for more cues on monetary policy. While information earlier this month showed U.S. inflation levels eased slightly, a slew of hawkish remarks from Fed officers cautioned the bank intended to stick to its pace of sharp charge hikes. Traders at the moment are almost evenly split over expectancies for a 50 or 75 basis factor hike by the Fed in September. Bucking the trend, the New Zealand dollar rose 0.3% after the crucial bank said it's going to probably improve quotes at a sharp pace this year to tame inflation. The financial institution had ultimate week hiked rates by using 50 foundation factors.